Good morning. We will pay attention to fixed assets today. When you complete a question on fixed assets, it is very important to determine when is the financial year, because quite often you have to do calculations over a long period of time. So if this is the end of the financial year, 28 February 2017, it means that my financial year is from 1 March 2016 up to 28 February 2017. So when you do the calculations, always determine what is your financial year so that you can calculate the amount for that specific year. Land and Buildings, a new store was built during the year. They don't give us the information, but we can see that the cost price at the end of the previous year was 1,1. At the end of the current year, it's 1,5. So that means that this amount that we added during the year is 400,000 Rand. And that's where I get my addition. Vehicles, except for the vehicle bought for 240,000 on the 31st of October 2016, that is during my year. The business bought the other vehicles on March 2013. That's a couple of years ago. Depreciation is calculated at 10% on the diminishing balance method. So first of all, we have to calculate depreciation on vehicles that we had in previous years. My vehicle cost is 740,000 minus the 240,000 that we bought during the year. So my old vehicles cost price was 5,000. The accumulated depreciation on the old vehicles, you have to deduct the 135,500 from it. So that means on the reduced amount, you will work out 10% for the whole year. Then the 240,000 that we bought during the year, I will only calculate depreciation for the number of months that we had it. So it's the 31st of October, so we will not work out depreciation for October. It will be November, December, January, February, so it is only for 4 months. And that will give me the depreciation on vehicles as 8,000 Rand. We'll add the 8,000 and the 36,450 together to determine what is the total amount that we have to record as depreciation. The cost price of 500,000 plus the 240 that we purchased during the year will give me the closing balance of 740,000. The opening balance of accumulated depreciation plus the depreciation for the current year will give me a total accumulated depreciation of 179,950. And if I deduct that from the cost price, we will determine the carrying amount of vehicles. If we look at equipment, old equipment was bought on the 1st of March 2013. So that's long before our current financial year. And that was sold for cash on the 31st of August 2016. That is in the middle of our current financial year. New equipment was bought for 120,000 on the 1st of September 2016. If we look at the equipment, we see that the total amount for equipment is 450,000. We have to determine if this 450,000 is the opening balance or the closing balance. They don't indicate that we didn't record these entries, so it means that we have to show the balances that's provided as my closing balance 450,000. Therefore, I have to work backwards to work out what was my opening balance. If I complete an equipment account and an accumulated depreciation account, I will have to start with a balance in my equipment account that I don't know. Then they say old equipment with a cost price of 60,000. So I will take out of the equipment account 60,000 and transfer that to asset disposal. Because we don't have this asset anymore, we have to remove it from our equipment account. In the accumulated depreciation account, we will also have an opening balance and we will have a closing balance. Okay, they also say that we recorded the equipment that was purchased, and the equipment purchase was 120,000. So we increased our equipment with 120,000. My closing balance for equipment is 450,000. So if I add up the credit side will give me 510,000. If I subtract the 120,000, it means that my opening balance was 390,000. So I have to complete this equipment account, record all the entries, and then by balancing determine what was my opening value of equipment. The accumulated depreciation on equipment is given at the beginning of the year. So my opening balance is 156,000 Rand. Old equipment bought on the 1st of March for 60 was sold on the 31st of August for 34,000. Therefore, we have to calculate depreciation on this old equipment to determine what is the depreciation for the current year. So if I look at the 60,000, I will work out depreciation at the end of 2014, 2015, and 2016. And because it's the cost price method, it means for those 3 years we've written of 6,000 every month. Then in the current year, we only use this equipment for 6 months. So the depreciation that I will record in the current year will only be for 3,000. Total depreciation from the date of purchase up to the date of sale will therefore be 21,000. So I must remove 21,000 from my accumulated depreciation account and transfer it to asset disposal. If I want to work out what is the carrying amount, so what is that asset worth the day that we sell it, we take the 60,000 minus the 21, and that will give me the 39,000. So I always have to calculate the total accumulated depreciation from the date of purchase until the date it is sold, so that we can subtract that total amount from the cost price to determine the carrying amount that we will remove from our business, in this case 39,000. Then at the end of the year, we have to calculate depreciation on all the other equipment that we are still using. The new equipment that we purchased was for 120,000 on the 1st of September. So on that equipment, we will calculate on 120,000, 10% only for 6 months, because we use this new equipment only for 6 months. On the equipment that was sold, we calculated that the depreciation for the 6 months in the current year was 3,000 Rand. Then I look at my equipment, 390 minus the 60 indicates that we used equipment for the whole year that we purchased in previous years, 330,000 times 10%, and that will give me 33,000 Rand. So if I add all that together, it will give me my total depreciation as 42,000 Rand. When I do this note, I have to go and balance the accumulated depreciation account so that we can determine what is the closing balance for accumulated depreciation. The depreciation on the one that was sold was 3,000. On the new one and the old equipment that we used was 39,000. So if I work out the balancing figure, it means that I must add all the amounts on the credit side, subtract the debit side, and that will give me my balance. The total on the credit side is 198,000 minus the 21 on the debit side will give me a closing balance of 177,000. So this closing balance in the equipment account I will show as the closing cost, and this balance in the accumulated depreciation account I will show as my total accumulated depreciation. And if I subtract, I can work out what is the carrying amount at the end of the year. You can test yourself doing the calculation and saying the opening carrying amount plus the 120 minus the 39 minus the 42 must give me 273,000. Otherwise, I made a calculation mistake.